Hi everyone, welcome back to my channel. This video is my usual weekly or bi-weekly technical analysis outlook on currencies and stocks. I'm making plans for videos that are related to currencies, stocks, and finance in general, so please subscribe if you like such content. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. As a start, I will do a review of the names that I've mentioned in my last video. First one being the euro dollar, which closed at 1.0710 on the 28th of June. Now, if you look at the price action this week, it bounced off the symmetrical triangle support trend line. This does not mean that it will turn bullish, but I believe at least this suggests an upward move going forward. How high euro dollar bounces will depend on whether it can break the 20-week simple moving average. The outlook will still have to be determined whether it is able to break out of the resistance trend line or whether it breaks down from the support trend line. As usual, if it breaks out of the resistance trend line, the outlook is bullish. There is a potential of 950 pips worth of move. If it breaks down below the support trend line, similarly 950 pips worth of move. The next cross that I will do a review on is on the Aussie dollar, which I last said in the last video that it is forming a symmetrical triangle as well. It last closed at 0.6668 on the 28th of June. Now I believe it is attempting to break out of the triangle resistance trend line. There were multiple attempts to break above this resistance trend line, which ended in failure. I'm not sure whether the next attempt will end in success or not. In any case, a new outlook will be determined by whether it breaks out of the triangle resistance or whether it breaks down from the triangle resistance. Now, next week, if the Aussie dollar manages to close above this resistance trend line on a weekly basis, then there is bullish confirmation on the Aussie dollar. Next move will be much higher from here. If it gets rejected by this resistance trend line, then very likely the next move for the Aussie dollar will be down towards this trend line. Whether or not it breaks, we will have to see. The final review for this video is on Richemont, in which I said that it is forming a double top in the last video. Richemont last closed at 140.25. Now in the last video, I noted that Richemont over here bounced off the cloud support. Subsequently, the next 2 days also ended in bounces off the cloud support, which led Richemont higher. But in any case, I believe Richemont has failed to push further to the upside because it has failed to hold above the 20-day moving average. This has led Richemont much lower from where the last top was. It depends on whether Richemont is able to close below the Ichimoku cloud. The current support is around 138.15, let's call it that. So if Richemont manages to close below the cloud, the bias for Richemont will be towards the downside. And the completion of this double top, this bearish pattern, will be via a breakdown below the neckline, which is a daily close below the neckline of 125.5. This week, I'm going to talk about new coverages. First one, I'll start off with gold. Last closed at 2,326.72 on the 28th of June. I believe gold is forming a rectangle, which is a neutral pattern, similar to what I've said for about symmetrical triangle. A new outlook will be determined by a breakout or a breakdown. So this is where we should look at for a breakout and for a breakdown. If there is a breakout, which is a daily close above the 2,431.59 level, this is a bullish confirmation, and the textbook target is at 2,582.97. If there is a breakdown instead, the level to watch for is 2,277.64. If there is a daily close below this level, it means we have a bearish confirmation. The textbook target is 2124.67. Moving on, the next stock that I have for you is Prudential London, a UK-based company. I believe it is forming a double bottom. What will give me more confidence that it is indeed forming a double bottom, a bullish pattern, is if Prudential closes above the 20-week simple moving average, the blue line over here, and moves higher. And once it closes above the neckline, which is at 839, a weekly close by the way, we will have a bullish completion, and the textbook target is at 984.4. Now this next stock is a name that we are all very familiar with, Walt Disney. Last closed at 99.29 on the 28th of June. Disney is currently within the range where a bullish potential could emerge. Now the scenario here is this. This will provide Disney with a bullish potential. If Disney bounces off the Ichimoku cloud over here to stage a rebound, then it can qualify as a head and shoulders top because the second shoulder will then be formed. Then it has to close above the neckline at 124.8 to turn bullish. The textbook target is at 171.06. Now, assuming Disney just falls further from here without rebounding, still the chance of it forming a bullish pattern is still there. It must rebound preferably above the $90 mark. It should not go excessively below the $90 mark, and then close above 124.8, the neckline, and still this can qualify as a head and shoulders top. Anytime it breaks excessively below the $90 mark, then the chance of a bullish pattern forming will diminish. The next name may not be that familiar to you. It's called Danaher Corporation. Last closed at 249.85 on the 28th of June. I believe it is nearing completion of a double top, a bearish pattern. A daily close below the neckline at 248.53 will complete this bearish pattern, and this has a textbook target at 228. I will speculate more on how this could eventually turn out to be like, but first I need to see a close below 248.53. The next name is likely a dream car for many people, Rolls-Royce. Last closed at 456.8 on the 28th of June. It has completed a bearish pattern called a rising wedge on the 25th of June. The textbook target is at 414.2. Now let's take a look at the 20-day moving average, which is the blue line over here. Previously, the 20-day moving average acted as a support for Rolls-Royce, bouncing price action higher and higher every time it was tested. Now, since breaking down below the 20-day moving average on the 26th of June, immediately it acted as a resistance for 2 consecutive days. So this is to be watched. If it keeps rejecting Rolls-Royce lower, this bearish outlook will persist. No big call on this next name, Infineon Technologies, which last closed at 34.23 on the 28th of June, because it is forming a symmetrical triangle, which is a neutral pattern that I've shown you in last week's video in the euro dollar, in the sterling dollar, as well as the Aussie and Kiwi. The new outlook will be determined by whether there is a breakout or a breakdown from this symmetrical triangle. Whether it's a breakout or a breakdown, the potential move is 21.74 euro. Now let's take a look at how price action interacted with the resistance trend line. There were attempts to break out of this trend line at least for 2 weeks. When there was a rejection 3 weeks ago, this resulted in a decline in Infineon Technologies. In the latest price action, we see some support at the 20-week moving average as well as the Ichimoku cloud. So potentially the next move for Infineon Technologies is likely to be higher and making another attempt to break out of this symmetrical triangle. Next up, Netflix is a name that everybody knows and a lot of investors are still interested in chasing higher. closed at 674.88 on the 28th of June. I believe Netflix may be forming a bearish pattern, but before I show you that, to clarify, Netflix is technically still bullish owing to a cup and handle pattern that was completed on the 18th of December 2023. The textbook target from this bullish pattern is at 804.52. But when referencing textbook targets, we should bear in mind that not all textbook targets are reached. In my experience, 60 to 70% of the time, textbook targets are not reached. And in the case of Netflix, there is a strong resistance at 691.72 that can reject price action lower. In fact, this week's decline may be a result of this rejection. So if Netflix falls from here, there is a chance that it forms a bearish pattern called a rising wedge. Let me show you over here. It looks something like this. Of course, this does not mean Netflix has entered into a bearish outlook. We still need bearish confirmation, which is via a weekly close below this wedge support trend line. If this happens, then Netflix falls into a bearish outlook, and there is a potential textbook move of around 195.63. Alright, that's the end of my sharing. I'll give updates to these crosses and names only when there are meaningful development, and the next videos will highly likely be on new crosses and names. If you like what I'm doing, please help me out by giving me a like. Please subscribe and hit the notification button for more videos like this.